Welcome back to Talk Tickers. All right, let's talk Miniso. They just put out their Q3 numbers and, on paper, they look great, but the stock pretty much went sideways. So, what gives? We're going to dig in and figure it out. So, here's the puzzle, right? We're talking record revenue, a solid beat on what the analysts were expecting, and yet the stock just sat there. It did nothing. It's like the market was shrugging its shoulders. So, what did Wall Street see that the rest of us might have missed in the headlines? That's exactly the disconnect we're going to unpack right now. Okay, let's start with the good stuff because, man, there was a lot of it. First up, revenue growth. A massive jump of over 28% year over year. That's a huge number, bringing them to a record-setting 5.8 billion RMB. Just wow. And it wasn't just about growing fast. They also beat what Wall Street was expecting. The consensus was for a lower number, and Miniso came in 3% higher. So, a solid beat on the top line. And the good news keeps rolling. It wasn't just revenue, it was earnings too. Their adjusted earnings per share, so what they're actually making in profit, came in a full 6% ahead of what the forecasts called for. This is what we call a classic beat and beat quarter. Everything looks good so far. All right, now here's where the plot thickens. If you look at this table, you'll see that record revenue number we just talked about. And check out the gross margin. It held up really, really well. Barely moved. But, and this is the big but, look at that adjusted operating margin. See that? That's where the pressure is. And you can bet that's the number the market zeroed in on. I mean, operationally, the company is just firing on all cylinders. They just crossed 8,000 stores globally. Their top toy brand, it's on an absolute tear. Revenue more than doubled from last year. And here's a big one. Their home market in China is recovering nicely, while the US market is just exploding, up over 65%. So from the outside, it looks like everything's going perfectly, right? And that brings us right back to the million-dollar question. You have record revenue, you beat on the top and bottom line, you've got all this amazing operational momentum. So why on earth did the stock do nothing? It even opened down before clawing its way back to flat. The market was clearly hung up on something else. And boom, here it is. This chart right here tells the whole story. Look at that gross margin bar. Pretty stable, right? But then look at the adjusted operating margin. It took a nosedive, shrinking by over 2 percentage points year over year. And why? Well, management said it's because they're spending a ton of money to expand overseas and are beefing up their marketing. This, right here, is the profitability squeeze that had investors hitting the brakes. And hey, don't just take my word for it. The big players on Wall Street are seeing this too. Now, most analysts are still pretty positive on the stock, but you're starting to see some cracks. Bank of America is a great example. They actually cut their price target and lowered their earnings estimates. And what did they point to? Yep, those same margin concerns. So the whole conversation is shifting from just, hey, look at all this growth to, okay, but what's this growth costing us? So what's management's take on all this? Well, they're basically saying, stay the course. They're still guiding for really strong revenue growth for the next quarter. And their full-year profit forecast? It's solid. They're essentially telling investors, look, we know we're spending a lot, but trust us, this growth is going to pay off in the long run. Okay, so that brings us to our call. What do we think is next? We're initiating on Miniso with a market perform rating. And here's what that means. The growth story, it's amazing. We love the global expansion, we love the IP strategy, it's totally compelling. But the market has spoken loud and clear. It's in a show-me phase. Basically, investors are saying, prove to us you can get these costs under control. Until we see those margins stabilize or even start to tick back up, we just don't see the stock making a big move higher. All right, so if we think the stock might just tread water for a bit, how could you play it? We've cooked up a trade idea that's, well, let's just say it's a little outside the box. It's called a pairs trade. And here's the thesis, plain and simple. You're betting that Miniso's specific strengths, its global rollout, its cool IP products, maybe even a top toy spin-off down the road, will help it beat out the rest of the sluggish retail sector. So you go long Miniso. But at the same time, you short a retail ETF, something like the XRT, to hedge your bet against the whole consumer sector getting weaker. You're basically trying to isolate Miniso's own story from all the macro noise. And what makes this really interesting is that over the past year, Miniso has actually lagged behind the XRT. So this trade is a bet that Miniso is about to play catch up and then some. So there you have it. That's our take on Miniso's quarter. It's a classic battle between a fantastic growth story and some very real concerns about profitability. Thanks for joining us on Talk Tickers, and of course, please remember, this is not financial advice.